trader. Tina once again from ShortMeTina.com with my daily recap. Before we start off with a recap of the overall market, I would like to welcome you. If this is your very first time tuning in, I want to say one, welcome. Two, do us a solid and comment in the comment section. Let us know your name. Say hi. I always say hi back. Generally, just introduce yourself. I like to know that there's actually viewers, real people behind the viewership that I see. So let your voice be heard. We're really trying to cultivate and build a community here. If you're returning and you listen to me day in and day out, you should be able to finish the sentence, right? Or maybe not, because sometimes I say you're my bloodline, sometimes I say you're my lifeline. But point is, it's appreciated. Thanks for sticking with us. Thanks for tuning in. Our goal, our mission is to develop traders. We're building a powerhouse, and I guarantee you, if you stick with me, if you stick with us, you will come out on the other end, not only a better trader, but you will be crushing it. You'll be crushing alpha. I feel I am that confident in my abilities and my skills to transform you as a trader if you are committed, right? I've been doing this for a very long time, and I feel I can tap into sort of like your better trader self, for lack of a better way of framing it. So if you're new, thanks for tuning in. If you're returning, thanks for tuning in. So to the overall markets, the S&P 500 daily chart dating back to 2017. If you want more color, just go listen to the videos that I've done literally every single day since October. I'm going to make this really brief. We closed at 289.47. For the past few days, we've been essentially flat, meaning we're trading between, let's say, 287 to 290, somewhere around there. That is okay. You know why? Because we've rallied from this December lows about 25%, right? And if you look back at some of the videos I did around here, I said I did not like the V-shaped rally because we ran up too fast, too soon, and we needed to digest that move, right? And so we did that here. This is digestion, meaning we're pulling back, right? Some sell-off, taking a breather. We pulled up some more. And granted, we're slightly up, but for the most part, we are kind of consolidating, right? Slightly. We're not having too much range within the daily price points, if that makes sense. And that's good, right? You want this move to be digested because you want it to move on up and higher, right? We're within, 1 to 2% of all-time highs, which is great. So as long as we can stay above resistance, 280 to 282, things should be good. What else? All right, we have the IWM daily chart. I'm paying attention really to what's going on around here. We closed at 156.05 today. On a bit of selling, what I'm paying attention to would be 158 to 160, hoping that we break above that and kind of sustain that move. If we can do that, more than likely we'll retest all-time highs and continue higher. And that's what you want, because why? It is far easier to make money in a bull market. Granted, my name is ShortMeTina. Granted, I know how to short. Granted, I do short stocks, but it is a lot. Shorting is not like a long-term investment strategy, in my opinion. It's really for shorter-term price movements. However, to make the big monies, you want there to be a bull market. You want to be long. Why? Because again, it's far easier to make money in a bull market on the long side. Hence why we want this, or you should want this rally as well to continue. So for the IWM small cap index, we're waiting for it to break above that resistance line of 158 to 160 and sustain that move. If it can do that, I am more than confident that we will go on to experience great things in 2019 and hopefully beyond. What else? And then we have JD. And by the way, the analysis that I've done thus far, the SPY, we did short the market at one point. We have since let go of our short. The IWM, we have been buying that in increments dating back to October. So we're up nicely on that. And in the premium member community, and JD as well, full disclaimer, we also went long this around 19 or 20. Remember, when a stock is showing you profits, you want to hold on. It's not easy by any stretch. I'm not saying it's easy, but you will fare better in the long run if you get accustomed to, and this is my opinion, if you get accustomed to like holding on to those really big winners, right? So we can use this as an example. So we went long around 1920, right? When you see it at 23, 24, can you take profits? Of course. Are you in profit? Of course you are. But if you had held on, this stock most recently went as high as north of 32, right? Entering at 1920, holding to 32 is so much greater than entering around 1920 and selling at 23. At any rate, the reason why it tends to be hard is because you'll have moves like this, right? We went to 32 and then we pulled back here to 29.85. And so I'm sure you're asking yourself, well, is the stock going to sell off and revisit 1920, or is it going to do what ShortMeTina, or rather Tina, thinks it's going to do, which is to at some point get to 35? Obviously, time will tell. But in my opinion, it is going to, and you can just see it. Look, rounding bottom. Pay attention. If you ever see this extremely bullish price pattern, rounding bottom, in my opinion, it's going to retest 35 and go on to do great things. Right now, we're kind of stalling, and that's okay. Anytime you have these moves, stocks do not go up in a straight line. You have your pullbacks. I'm still expecting 35. Still bullish on JD until otherwise. What else? And then we have Disney daily chart up about 1.5% on the day. Full disclaimer, full disclosure. If you've been paying attention for the past 2 to 3 days, you will know that we went long Disney in the premium member community. We bought when the stock was around low sevens, experienced this gap up. So similar to what I indicated with JD, right? So we got into the trade around the low 100s. When the stock traded at 115, could we have taken a profit? Absolutely. 118. Obviously, you're still in profit. However, if you had held on, right, and not just take the slightest profit, if you had held on, right, sitting here at 131.75, or most recently up about 132.36, you would have made more money than cashing out at 111 or 115 or 120, etc., etc. So a couple of things with the Disney chart and why I think we can potentially hit 150 and above. So if you look at the chart again, it's a daily chart dating back to January of 2017. You know I like to trade the range, buying support at times, selling resistance, buying support. It would have worked. Look, buying support, buying support, buying support. All these times for the past 2 years, support, a little over 2 years, support has held, right? And so now we're up here. We have broken out of this channel, and generally speaking, when a stock has traded within a channel for, we can say, let's say a multi-year channel, right? Over 3 years, 4, 5, 6, 7 years. Once it breaks out, you usually go on to see higher highs. I mean, once it breaks out, the stock usually runs a lot more. And you can see this, and they've been mentioning this a lot on TV, and it's so true. Because we did go, I'm trying to get my memory, we did go long Starbucks. That's the stock, Starbucks. If you look at Starbucks, that stock was also trading within a range, right? A multi-year range, and it broke out. Nike as well. So, when you get a chance, you know what? I'll do it. So let me wrap this up. So with Disney, right? Once it breaks out of a multi-year channel, it usually tends to go that much higher. So granted, we're at 131.75. You can have your possible pullbacks, but if you hold that, I really think you're looking at a stock that's 150. And if everything goes right and with momentum in a bull market, this can actually be a $200 stock. All right, so just making notation. So Nike, look, ticker NKE. Remember what I was saying about stocks that have been trading on some levels within a range or a multi-level or multi-year channel, and once it actually breaks out of that channel, it tends to go higher. Perfect example, Nike. Look, I mean, I don't have, let's do this. Let's clone this so you can see the channel. Boom, right there. You like that? I like it. All right, so multi-year channel dating back to 2015. Finally got the breakout in May of 2019. We shot up. Great. Remember, you have your pullbacks. Pulled back. And look, Nike is trading at 88.73. Most recently went as high as, I'm not sure, north of 90. So from this breakout here of 70, you've had about 20 points. Once a stock breaks out of a multi-year channel, expected to do great things. I have one more example. The other example, LULU. I'll show you the channel right now. So I guess this is a video on trading channels, right? So LULU daily chart, multi-year channel, dating back to January of 2012. Hence why we actually went long this stock somewhere around here in the 40s. And if you held, right? If you held, look at the glory. Multi-year channel. I showed it to you with Disney, why I think it's gonna go to 150. I just showed you Nike. I'm gonna show you LULU, and after this, I'll show you Starbucks to drive home my point, right? 2012 multi-year channel, right? 6 years in the making. And I knew this was going to happen. 2012. Sometimes it's just a matter of waiting. Actually, I have two more. I have two other things to show you. 2012, right? Multi-year channel, 6 years, breaks out. The breakout point comes in at around 80. Boom, 171, almost doubles. But it's not a straight line, right? So we got here at around 158. We had the pullback. Most people will sell into this. It's up to you whether or not you want to sell into this and try to time it, but it eventually goes higher, right? Multi-year breakouts. Once you can find them and spot them, and I love to trade these, they're going to give you glory. Let me give you another one. Now, again, why I love channels and why I love them actually when they break out. StarBucks. So remember, I started with Disney. You can rewind the video. Disney, we went long in the hundreds. It's sitting at 130. I think it can get to 150, and with the bull market possibly 200. Why do I like it? Because it just broke out of a multi-year channel. Disney, I just showed you. Nike, how I showed you the multi-year channel and the breakout and how high it's trading, right? I just showed you Lulu, and I'm going to show you Starbucks as well. So the thing is, when is it actually going to break out of the channel? But once you see these channels, stalk them, because once it breaks out, you know you're going to get something really good. So Starbucks channel, dating back to 2015, it broke out of the channel. Most recently, 2018. So sitting here at 75, yes, you're going to have your pullbacks, but put this on your watch list because the breakout just started. And so if you look at Nike, Lulu, you'll have your pullbacks, but it eventually goes on higher. So it broke out of the base, we can say around here, let's call that 64, 65. And most recently it went as high as 76, sitting here at 75. So you're going to pull back. And once it pulls back, you want to buy again because you're looking at a stock that just broke out of a multi-year channel. I might have one more to show you. What else? All right, FireEye. So a couple of things with this. We actually went long in the premium member community. We went long this stock, I want to say 14 or 15, something like that, like in the mid-teens, and then we saw the stock go as high as 20. We have since pulled back. This stock, and it's only accessible to premium members. However, I have disclosed 3 already. So at the ending of every year, I usually bring out a list of stocks I think can succeed. Like, I'm not talking about 5, 10, 15%. I'm talking 100, 200, 300%. Like the first time I did it, I had names such as Canada Goose on there. I had Canopy Growth. I mean, these stocks were like huge monsters. And so I did a list, and on my list, it was Disney. It was ticker EVOP. These are stocks, and also on that list is ticker FEYE. Now, if we go back, or if you're paying attention to the channels that I was just talking about, this is also in a multi-year channel, right? Dating back to late 2015, early 2016. We're in 2019. It is still within the channel, sitting at 1557. We haven't broken out, but again, I'm anticipating that move. So it's been a very sort of dormant stock. It's not fun, right? Granted, we got that initial pop from around here to 20. We made, about 30, 35%, but the stock has since pulled back. And the reason that I'm very bullish on ticker FEYE and FireEye, it's because once again, it's in a multi-year channel. I know when stocks break out of a multi-year channel, they tend to go extremely high. So sitting here at 1557, if it eventually breaks out, I see this as a $30 stock, to be honest with you, hence why it made my list. I'm anticipating that breakout is going to happen in 2019. It may or may not, but you kind of want to be in it because you don't want to miss the rally. At least that's how I look at things. And so if you go back, and I'm rambling, but if you go back to why Disney just broke out, why I think it's going to be 200. I showed you Nike, Lulu, Starbucks. It has the same or similar characteristics. Hence why I like to trade channels. One, because you buy at support, sell at resistance. And also why I like to find stocks that have been trading in a multi-year channel, because I'm anticipating that breakout. And once it breaks out, I know I have a potential to get 50, 60, 100% on my money. And it's not just channels. There's like, I would say maybe 9 or 10 other bullish patterns that'll give you those huge returns. So when you sit here and I say things like, well, we went, we took this trade and we're up 40, 60, 70%, it's because I'm really just looking to find stocks like these, the ones that are in a channel, and the other 8 or 9 patterns that I'm very comfortable trading. So you don't have to trade everything. Find the ones that are going to give you the best returns. You stock them, you learn them, and you trade them. And that's exactly what I do, and that's exactly what I teach. What else? And only because I am Tina, I'm going to drive it home one more time with ticker Glu Mobile. And this is actually another huge winner. Why? Because I'm seeing the same setup in the same pattern I saw in ticker LULU or Nike or Starbucks that I'm seeing now emerge in Disney. Multi-year channels, right? So Glu Mobile, this channel goes back to 2007. Hence why I don't really trade intraday. I'm not a day trader. I like to look at longer time frames because it tells a big picture or a huge story or a better story in my opinion. So this stock, and I've been in and out of Glu. I know Glu Mobile like the back of my hand. So this channel goes back to, again, this channel goes back to 2007. And look what happens when it finally breaks out. And I'm going to do a disclaimer here. We actually took this trade a while back, 2017, when the stock was trading at around, get this, around $2.45. Why? Because I love to trade channels. And so I find them, I stock them, I trade them. You buy, which we did around here, which is very close to the lower end of the channel. And you sit and you wait. And so look what happens here in 2018, right? It finally breaks out of its channel, and look, 243, went as high as 1132. So if you do the math, it breaks out of its channel, the multi-year channel at that. The breakout occurred, or the breakout level is around here, 55 to 550, even $6, and it almost doubles, 100% gain, right? And if you look at the others that I've spoken about, you'll see a similar pattern. So your job, I'm just sharing something with you. Find a channel, stock it, find a breakout, trade it. You're going to thank yourself. What else? And so let's cap it here. We have Zynga down about 2% on the day, sitting here at 525. So not worried. We actually got into this trade, another premium member community pick. We got into this trade when the stock was trading around the low to mid 3s. So no worries here. I still see this as a $6 stock, another 100% gains. Granted, you can spend your time looking for, stocks that are going to give you, 3, 4, 5%, while my initial target is usually around 9, 10% because it fits into my methodology. If I'm picking a stock, chances are it has a lot of room to run. And so although Zynga has seen a pullback, that's perfectly fine. I still like the chart longer term. I still see this as a $6 stock. Again, not saying to jump in, right? If you're hearing this trade idea for the first time, sitting at 525, you have to assess it for yourself. But being that we went long, or it was a trade idea to go long in the low to mid 3s, we can sit and stomach these pullbacks, right? Taking profits along the way, but holding out for 6 because I think it can definitely get there. All right, so I'm gonna cap it there. Tina, once again, from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comments section. Say hello, let me know what you thought about the video, just anything, just comment, let your presence be heard too. If you want more video like this, then definitely head on over to our YouTube channel at ShortMeTina. Hit that subscribe button, turn on notifications. I do videos Monday, Tuesday, Wednesday, Thursday, and Friday. Whenever the stock market is open, you can expect a video. If you are subscribed and notifications are turned on, you will never miss a video. And lastly, head on over to ShortMeTina.com. I've been trading for over 15 years. Sign up. If you think you can learn anything from me, become a member. Thank you for listening, and as always, thank you for the support.